Last week, Apple launched a savings account with 4.15% APY. What does that mean to the banking system? What does it mean to the financial world? Those are the things we're going to be discussing in this video. Hi, my name is Boof, and this is Crypto Vagabonds YouTube channel. In this channel, we discuss cryptocurrencies, microfinance, geopolitics, and everything else in between that may affect the performance of your favorite crypto asset. If you do like this kind of content, please subscribe to the channel and click the notification bell. Now let's go straight into the video. Welcome to Crypto Vagabonds YouTube channel. Today we're going to be talking about the product of Apple, which is a savings account with 4.1% APY. So this is it. This is right here what Apple is offering. As of April 17, 2023, Apple offers a savings account with 4.1% APY. When you compare this with banks such as Wells Fargo offering an astronomical 0.15% and demanding $25 minimum balance, or you compare that with Chase, which is offering 1 basis point. This is 0.1% and requires a minimum of $25 balance. Or Bank of America, which was on the biggest bank, also being very proud to offer 0.1% and demanding a minimum balance of $100. I don't think the commercial banks will be able to compete with Apple. And here's the reason why. You can see here the market funds graph. But before explaining this graph to you, I want to share with you a little footage of Jim Bianco. So let's go for that footage.
This is the size, this is 43 years of deposits in banks. And it shows you on the bottom part in red, the drawdown. How high are you off the all-time high? Now what jumps out in the chart is the middle. That is October of 2001. And that was right after 9/11. And what happened was the World Trade Towers came down, and a lot of the buildings around the World Trade Towers were damaged. A lot of those were like the Bank of New York, that are big transfer banks. There was a blockage in the payment system because of damage to the infrastructure that caused that drawdown in deposits.
Physical damage.
Physical damage, yes. And so that is a unique situation. So if you remove that, what you see on the chart is the biggest drawdown in deposits in at least 43 years and probably 50 years that we've seen in banks. And there's a little label on that chart for March 8th.
So what he's talking about is this is the size of the amount of money leaving accounts or commercial bank accounts. And what he's talking about is this little portion here where he put 8th of March 2023. If this is 45 years and this is 2008, you can see that the money was already going out of accounts before the SVB bank. That's why he put the label there. Now, he's going to explain also why the money was leaving the banks way before SVB or Peter Thiel suggest that his friends should take the money out.
The drawdown was still minus 383. March 8th is 2 days before Silicon Valley went bankrupt. So this was underway for a period of months, this withdrawal of assets out of banks. And I think really what we need to understand is the nature of how banking has changed in the last couple of years, and that's sped up in the last 6 months. Let me explain that. We have now live in a world of mobile banking. Everybody listening to this podcast is probably into crypto, probably a lot younger than me and Ben, and you do all your banking on your phone. You probably never even physically set foot in a bank branch. That is the way that the world works. But for 14 years, interest rates, whether your bank gave you on your savings account or your checking account or was available in the market, was the same. It was both zero. So there was no reason to think about those interest rates. Well, a year ago, the Fed started raising rates. And because of quantitative easing, the bank said, I've got enough deposits, I've got enough assets, I don't need any more. So they didn't raise their rates. So as rates went from 1, 2, 3 to 4%, the interest rate you got on your bank account was zero. In fact, JP Morgan Chase still advertises on their website that if you open a savings account with them, your interest rate you will get is 1 basis point, 1. But if you are a preferred customer, they'll double it, so you'll get 2 basis points if you are a preferred customer. So that has worked for 14 years because market rates were that. But once we got past 4%, that was about Thanksgiving, behavior started to change. People started to pull their money out of the bank and put their money into a money market fund because it was yielding 4.
So basically what he's saying is the following. People start to move their money out of the bank accounts because the money market funds were offering above 4%. Now, for you to take your money from your bank account and move into a money market fund is a little bit more difficult than to get an Apple savings account. Not to mention Apple savings account looks cool. Apple has its own culture. The people who use Apple, they are loyal to Apple. So here you can see what Jim Bianco is talking about. A money market fund offers 4.45%, while most you can get on a savings account is still less than half of 0.5% is 0.48%. And this is not all the data that I think is important for you guys to pay attention to. There's a little bit more data that I can share with you guys. The cost of acquisition of a customer. So a US bank spends between $750 to $2,500 to acquire one single customer, and that is investment on marketing and a few other investments. I just spoke to a friend earlier today when I was talking about the materials for this video, and he told me that he opened a bank account on a bank because the bank was offering him initially, if a broke person just walked in that bank, the bank would give a balance of $2,000 on your bank account. The only caveat was he would not be able to withdraw that money for 6 months. So imagine this, you go to a bank and the bank already gives you a balance of $2,000 on your bank account, which you can withdraw 6 months later. So that is the cost of acquisition per client. Now, when you compare that with Kaspi, $26, Tinkoff, which is a Russian bank, $18, Cash App, which is just an application, $5, Nubank, which is international banking, $1. I believe the cost of acquisition of Apple is below $1. So if you're talking about cost of acquisition per client being on the pennies, while for banks it's between $750 and $2,500 is no-brainer. Banks are not going to be able to compete. Just the acquisition of clients alone will kill the banks. Now let's look at a few more data. This is the number of digital wallets used compared to one of the largest banks in America, which is JP Morgan. So people using Venmo per annum has already surpassed the amount of clients that JP Morgan can use. This is because the easiness in which you can just use an app and make a payment, and the data continue piling up. You can see here India. And here's something very incredible about India. I'm going to talk about my experience. I went to India a little bit over 15 years ago. And when I went to India, there was a few times when I went to make some purchases. And because I have credit on my phone, people who are selling me stuff, they do not want to receive cash. They want to receive phone credits. And that's because a lot of people in India are not served by regular banks. They don't qualify for bank accounts. But there was a possibility from the telephone company that you could send credits to another telephone. And again, the telephone company was not trying to compete with banks. But the truth of the matter was, when I went to buy sometimes something in a restaurant, someone would say, you can pay with phone credits. And they would give me phone for their relatives in a different location. And that relative could then transact or offer that phone credit for groceries. You can see how, to me at least, that was the beginning of payment via the phone without the banking system. And that was with phone credits. You can see here WhatsApp, how much transaction they did. There's another app here, Google Pay is already bigger than Amazon Pay. But in India, you can see how Google Pay, Amazon Pay, PhonePe, which is another app, they're making large amount of transactions. And again, here's a symbol for Google Pay. So it's not just Apple, it is Google Pay, Amazon Pay, is a whole bunch of other applications that belong to the big tech, which can compete with the banking system. Now let's go back into Apple. So here we have the website from Apple. This was April 17, 2023, but a lot of people only heard of this in April 2023, but people who are into Apple, they heard of this in October 13, 2022. Apple announced Apple Card will soon let users grow daily cash rewards while saving for the future. Apple Card users will be able to grow their rewards in Apple Wallet by automatically depositing their daily cash into a new high-yield savings account from Goldman Sachs. So the partnership with Goldman Sachs was already announced in October 13, 2022. And here we have it on April 2023, Apple Card savings account with 4.15% APY. Now, starting today, Apple Card users can choose to grow their daily cash rewards as promised in October with savings account from Goldman Sachs, which offers high yield APY of 4.15%. That rate is more than 10 times the national average. So as you hear Jim Bianco saying, people are looking for yield. Interest rates are high, inflation is here. People are going to put their money where it's going to be better rewarded. And if you compare that with open account in the bank, Chance Miller on his Twitter put it here. Apple Card savings account is now live, took less than 2 minutes to sign up. And more. Apple Card with MasterCard. The simplicity of Apple in a credit card. With Apple Card, we completely reinvent credit card. Your information lives on your iPhone. Beautiful laid out and easy to understand. How many people go to their bank's websites and they have no clue what to do? Banks don't have the idea of making user-friendly products. Apple does. They're giving you a metal card, which used to be, again, for those who don't know, metal card used to be for high rank or high net worth individuals who had millions in accounts. The companies would give them a metal card. Apple is giving a metal card to anyone with any amount of money into their accounts. No fees. How many of you complain or have seen money charging you to have your money? You put your money in the bank and the bank charges you to be the custodian of your money. Apple is saying no fees, not even hidden ones. The first credit card that actually encourages you to pay less interest. Unlimited daily cash back. Get 3% daily cash back with Apple and select merchants when you use Apple Pay. Get 2% daily cash back. Banks cannot compete, at least in my view. Grow your daily cash over time. Look at the website. Again, goodbye plastic, hello titanium. Your card, your info, your business. Pay for your new Apple products over time, interest free. Now, here's something that they are offering, which I forgot to mention to you guys. In South America, in places like Brazil, you can go and buy things on credit, but not just buy on credit. You buy on credit and you can pay in installments. Apple is going to be offering that. And I think it's going to be a matter of time before they offer you actual credit. Remember, big fish, big banks are eating smaller banks. Apple, I believe, is going to be open the vacuum and they're going to start to finance or offer credits. I think it's going to be a matter of time before Apple offers or create their own coin, their own cryptocurrency, which is going to be global. I don't think the banks can compete with Apple. I could continue going on and on, but before I go on, or before we come to the end of the video, I want to share something with you guys about Twitter, because it's not just Apple. Twitter is partnering with eToro. I'm going to make a video about Twitter, but before I talk about Twitter, I want to share this with you guys. This was a year ago. And when I saw this, I was like, the banking system are in trouble. Just look at this.
Yo, we're here in Chicago. And we've got David here in a Starbucks in El Salvador. David has his Strike account linked to his Twitter account. And we're going to make a free, instant, cash final remittance payment over Twitter. So I'm going to go search David's Twitter account on my phone. I'm going to find his tips button, and I'm going to send David $10 over Twitter for changing the world. It's going to open my non-custodial Lightning Moon wallet. Anyone in the world can download, and I'm just going to hit send. And boom. We just made an instant free remittance payment from Chicago, Illinois, USA to San Salvador, El Salvador, over Twitter. Why would anyone ever use Western Union again? When you take one of the world's largest social internet networks and you combine it with the world's best open monetary network, Twitter accidentally becomes one of the best remitting experiences in the world. This one singular payment standard and this one singular open monetary global monetary network is dematerializing all existing monetary networks. Western Union, pawn to E4, your move.
So in this video, as you can see, remittances and borders. Apple has no borders. Twitter has no borders. Those payment system, I think, is going to undermine the backwards banking system that is still confined to borders. That is my view. I will leave the video here. My question is to you now, what do you think? Do you think commercial banks have a chance? Would you still keep your savings account on your favorite bank? Because there used to be a sentence before that would be easier for you to get divorced from a wife than to change your bank account or to change the bank that you have your money in. Today, there's a lot of reasons for you to change your money from your bank account to something else. I believe this is just the beginning. I believe the commercial banks would not have a chance. So as you could see, Twitter a year ago allowed you to transact internationally. I believe Apple have no borders throughout the world. You see a lot of people using Apple. Apple also have a lot more information on their clients. Besides making the experience very user-friendly, they're going to be harvesting more information. They have a lot of information on our data. They protect us apparently from other people getting to our data or other companies getting to our data. But the truth is, other companies are not getting our data. Apple is protecting its own interests. They are the ones collecting our own data because we're using their software. Now, you put that into the idea that they also want to be able to provide everyone financial transactions globally, remittances globally. They're going to be collecting more information. They're going to become very powerful. And I don't think the commercial banks would stand a chance. Those are my thoughts. My question to you now is, what are your thoughts? Do you think commercial banks have a chance? Do you think people are still going to continue using the backwards banking system? Leave that on the comment below. Also, if you know someone who can benefit from this video, please do share. If you do like the video, please consider subscribing to the channel and clicking the notification bell. This is it for now. See you guys on the next video. Thank you.